All right, here we go. All right, hey everyone. Thanks for joining me for another Bitcoin and market analysis. I'm sorry I'm running a little bit behind today. I have to blame it on TradingView. Okay, I am simulcasting, and it's just a pain. The way I have to set it up is kind of tough. I'm still trying to iron that out, and hopefully soon I'll have that figured out. Anyway, I wanted to be able to simulcast today because, you know, I should be on there too. Anyway, thank you all for your patience. Thank you very much. This is Mark P. Markets, Mark Principato. I'm a chartered market technician, and let's get this thing started. I see your people posting questions in the other channel here. Thank you for doing that. People on TradingView, if you're watching me on there, here's how this works. Just share your questions that you know, any stock or market that you'd like to see. Please share it in the chat now. So as I'm going through my portion of the analysis, your questions will be in there. Please ask one symbol per person because I'm probably going to get overrun with symbols, and I'd like to try to answer as many as I can in this session. Also, one other thing I just wanted to mention, if you are new to the stream, just make sure that you put USD or USDT after an altcoin, so I make sure I get the right symbol. All right, so with that being said, let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. TradingView, you can't see my my slide for that, but that's the idea. Anyway, all right, so let's get this thing going here. First things first, you know, today is Monday. Again, thank you all for joining me today. I want to run through the economic calendar very quickly. All right, now I don't use the one on TradingView. There's one on there. I just use another one because it's just simpler, and that's just one that I like. It doesn't matter which one you use. The whole point of the economic calendar is to make sure that you're not running into any major events without knowing about them that can cause some kind of range expansion intraday, and you weren't prepared for such an event. Okay, so let's take a look at the week here. Tomorrow is the 12th, so we're going to start with that. And what I see is for the pound, Great Britain, claimant count change, no big deal. ILO unemployment rate, that's usually not a big deal. Perhaps if you're in the pound, it may have some effect, but these usually are not big dollar moving numbers. And it's the dollar that we need to pay attention to here because that's what has a major effect on these global markets, right? If there's any major move in the dollar. Germany, harmonized index of consumer prices. That's out on the 13th, which is Wednesday. Again, not a big market mover. Also for the US, now this usually comes out around 8:30 a.m. or 10 a.m. Eastern time. Consumer price index, food and energy, and then, excluding food and energy, and consumer price index year over year, month over month. Those are inflationary numbers. And if there's any kind of surprises in there, you may see a move in the market because right now we're very sensitive to that word inflation because, you know, it's transitory based on what what's his name has been saying. But now they're like, oh, wait a minute. No, it's not really transitory. We were just joking. So we also have on the 13th FOMC minutes. That usually comes out around 2 p.m. Eastern time. Now, that's the meeting minutes. If there are any surprises in those minutes, you could see some sort of reaction in the market. This is going to be more important for stocks, really, that type of thing, if it's like an intraday move. Now, also on Wednesday, we have European Council meeting, not a big deal. In the evening, we have Australia unemployment rate and employment change. That can affect, you know, Aussie crosses or Aussie pairs, but again, not a big number to worry about. Also on the 13th, China consumer price index. Could have an effect because, you know, China is now in the spotlight again as far as economic stuff goes. On the 14th, we have European Council meeting, no big deal. China retail sales, usually not a big market mover, okay? Now on the 15th, which is Friday, we have US retail sales and Michigan Consumer Sentiment Index. Usually, again, these aren't big numbers. Then on the 17th, we have China GDP. So what I'm looking for in these economic reports, again, these are not for trading opportunities. This is just to be aware of any major reports, like I said before, so you can manage risk or perhaps make adjustments going into a number. The main things I'm looking for are NFP, which we had the Friday before, or I'm looking for any type of FOMC meeting or any type of testimony from Chairman Powell. Those are the major market moving events, okay? And primarily out of those, NFP is the biggest one, and it's scheduled every month. So that's the first Friday of every month. usually, and that could be a big market mover. Also, the outcome from such a report can have an effect on the coming weeks, right? So I don't care what the report was. What I'm interested now is what the price action, how the price action is, how it's processing that information, because it's not something that's going to happen in a couple of minutes. It usually sets the tone for, you know, a couple of weeks or perhaps even months. All right, so let's talk about Bitcoin now. Again, thank you all for your questions. I see a ton of questions in here. And let me see how TradingView is doing. Oh, what do I got here from TradingView? Oh, someone, Bart Guy, thanks so much. Bart Guy sent me 200 coins. Thank you. I appreciate that very much. I don't see any chat, I don't see any questions in the TradingView chat. So people, if you're watching in there, do I have anyone watching in there? Yeah, I have a couple of people watching. Now would be a good time to start sharing your questions in there while I'm going through my analysis. All right, so let's begin here with Bitcoin. Here's the thing. So I understand you have to look at, when you look at something like this, all right, here, let me get my box here. When you see something like this, what we look for is the obvious. I mean, the human brain is, that's the way it is. We look at the obvious and then we make judgments from this, okay? That's understandable, but markets are abstract. So we can't sit here and react to this. Now, you see there's a line. I have a line in this area. That line, if you look back, is relative to this congestion area. I wrote about this in my TradingView article yesterday. So my point is this. You cannot grasp the obvious. You have to look at what we're going into. So everyone's focused on the bullish candle. Yes, it's bullish, but the area, the context of the area is not favorable. So this is a low probability place for new longs. I would not go long here. I wasn't willing to go long in the low 50Ks. I'm certainly not going long here. So you have to look at what you cannot see. If there are any sell orders in this area, you're not going to be able to see them. Okay, the result of sell orders in that area will culminate into a inside bar, bearish pin bar. The question that you should be asking is, what are the next two candles likely to look like? From this area, I would anticipate bearish candles. I mean, I could be wrong, and this structure certainly supports a higher high. I also wrote about that yesterday. I said, if this thing breaks out, this thing can see those low 60s, but here's the point of something like this. And again, if you're an impatient person, short-term timing is not going to be a good fit for you. Swing trading is not going to be a good fit because you have to have a lot of patience. And patience means sitting through moves that are going your way without getting into them, right? Patience is not just sitting through a consolidation saying, oh, that was easy. The market's not really going anywhere. Sometimes the market's going somewhere or it looks that way, but the risk is too high. That's the problem in this area. This risk is ridiculous. So let's look at what that risk is. And let's talk about the trade idea that I put in TradingView yesterday. I put an example, right? I didn't put an official trade idea. I put an example, and I said, if it breaks 56.5, which it broke, right? The stop would have to go somewhere around 53.5 or 53. It went there like within an hour after I wrote that article, and it would have stopped you out, okay? And now look at it. So that's the random nature of the market. Perhaps there was some news there. I don't know. I don't care. I don't pay any attention to that stuff. But the point is, it took out this little minor higher-low support area. It went to 51K, and now it's here. So that just goes to show, if the rug is pulled from this thing, it can pull back quickly. I'm not willing to take that risk because how much higher is this thing going to go without any friction or any problems? Look, you're going into this congestion area, and then you have the 60K area. And then you have like the 62K resistance. You have all this up in here. So what are you going to do? You're going to risk 3,000 or 4,000 points in hopes of just getting one-to-one? Reward risk. If you bought this right now at 57.6, it would have to go to what, 60.5 just to justify 3,000 points. But that's 3,000 points. That means you need to risk 3,000 points, and can you realistically take a 3,000 point risk from here? The candle alone is almost 3,000 points. So the market risk is not what you want it to be. The market risk is what the market determines, right? The market defines the risk, not you. And the market risk is here, 51, right, or 50K. So your stop in that scenario would have to go there. So you're looking at about 7,000 points of risk for a swing trade. Not worth it if you're only going to try to go for 3,000 points where the first target would have to be. And yeah, there's a small chance that it can keep going, but unlikely. I mean, because look at this thing. This type of rate of ascent is not sustainable. And because Bitcoin is relatively slow compared to, some other instruments, I mean, this is slow. It took like 2 weeks for it to do that, and it doesn't make changes right away, right? And by the time it does make a change, it can be swift. So it's like it lulls you to sleep, and then next thing you know, it pulls one of these on you. So to make this simple, you have to look at the reward risk and the probability of the area. Reward risk doesn't make sense here, and the probability of the area does not make sense for new longs. This is a good place to be reducing risk, taking money off the table, that type of thing. You're at highs, you're into a resistance. If you're in from a lower price, great time to unload your risk onto people who don't know any better. Now, you have to understand something too. There's a lot of, when you see something like this, it's going to attract a lot of hype and a lot of nonsensical analysis and all kinds of over-exaggerated talk, okay? You have to understand something about those content producers. They don't care if they're right or wrong. And in fact, you may think with logic, you may think, well, if they're wrong a lot, no one's going to follow them. But that's not the case at all. You could be wrong a lot, all right? The market will eventually make you right randomly. That's all they need, because what they do is they push hope. That's their goal. Why? Why do they want to push hope? So that you click on some affiliate link or something. And maybe you say, but I don't click on affiliate links, so they don't get my money, but someone else will. And someone will support them, and they will continue to produce that type of emotional appeal, right? You need to ignore that stuff. I'm not saying that because, I'm a competitor and I'm trying to blah, blah, blah. I'm saying that to help you understand why that information is not useful, number one, and can lead to you losing a lot of money. Hope is not a strategy. Here's the problem with hope, and I've talked about this before, but I have to say it here real quick. When you buy some other product, okay, let's say you buy, a t-shirt, you buy some shoes, whatever it is, you pay your money for that product, and that's it. You spent your couple of $100, and there's no more money to spend. That couple of $100 expense doesn't grow, right? It won't turn into $1,000 expense. But when you have hope and you're in a financial market, that $1,000 loss, if you don't use a stop or whatever, and you just have hope, can turn into a $2,000 loss, or worse, wipe out your account. That's the problem with hope, right? There's no limit to what it can do to you, because financial markets are highly random and they can do whatever they want to do. And if you add leverage to that equation, and you add, second guessing, and you add fear of taking a loss or pain avoidance, all that complex psychological stuff, it's a recipe for wiping out your account. Maybe not this time, but eventually you're going to get caught in that. That's just the nature of this, okay? And then what do? You get wiped out, you get discouraged, you quit, and someone else takes your place, right? And that's what these guys depend on. So anyway, I just wanted to throw that in there so that maybe you're more aware of that type of content before you consume it. Just be aware of what you're consuming. If you like to be lied to, and you like hope and all that stuff, it makes you feel good, well, they're accomplishing their part because they're producing content that, is, I guess, of quality, because it's making you feel the way you want to feel. But is it healthy for your account is really the question. All right, anyway, so that's Bitcoin. All right, so basically not touching it, looking for pullback. For a long, I would like to go long Bitcoin, but not here. 50K is the support right now. And this 51K little tick, this little move right there, kind of emphasizes that, right? It touched 51K and reversed in everyone's face very hard. I wonder what all those fake gurus were saying when it was pushing that low, how many shorts got short. Anyway, the point is, I want to see a corrective move back to the 50K, 48K support area. That's the support right there in this area, right here. So that's high probability area. That's an area where reward risk makes sense. And that's where I would that's why I would be open to swing trades. If the market can't align with that, I have no interest in it. Okay, so that's Bitcoin. Let's jump over to the stock market real quick. All right, and then I'm going to jump over to gold, and then I'm going to answer your questions. Again, I'm running a little bit behind today, so I appreciate everyone's questions. I see a bunch of questions in TradingView. Thanks, guys, for asking all your questions in there. I will get to them here momentarily. All right, so stock market. Stock market started out green earlier today, and this is not green anymore. Let's take a closer look. So here's the thing with something like this, and I've been talking about this and warning about this. We've had some bullish days, right, with the stock market, and everyone gets excited. Hey, should we buy stocks now? Hey, should we buy stocks? No, you shouldn't buy stocks. Here's why. This is a lower high. It was established, that lower high was established on Friday. Okay, what was Friday? NFP day. So the market obviously was not happy with the non-farm payrolls, and it closed weak. We took out that low today, even though the candle was green earlier. So this is a tricky area. We have a lower high established. So that would have been a signal for, and I talked about this, someone was asking about on the previous stream about buying puts and this and that, and I described this type of scenario, actually that was on Thursday, and I described that on Friday. You know, that would be the action you would take on Friday if you were looking for some kind of short, perhaps a market index, maybe a CFD like the NSX, something like this, or the S&P, whatever it is, right? That would be a possible idea. Now the thing is, the way the candle is closing, because what we have about 30 minutes before it closes, this candle, while it made some progress, right? It pushed the low a little bit. This is not characteristic of a sell-off, okay? That's the problem with that. A sell-off candle looks like this. It's long. It's an expansion, right? It should look something like that. It should be more dramatic than it is right now. Who knows? Maybe it'll be dramatic overnight or tomorrow. But the thing is, when I see slow progress like that, and if I'm short, okay, I don't have any shorts in this right now, and this is something that I am open to shorting. When I see slow progress like that, if I'm a short, I'm concerned, because that's not what a weak market should be doing. What may happen here over the next few days is a higher low. And as a short, I would not want to see that, okay? And if we don't get the higher low, it's possible that we get the double bottom. I've talked about this before, and those scenarios are still in play. So obviously it takes patience. You have to see how the market performs tomorrow, perhaps the next day. But if we get a bullish reversal in one of these areas over the coming week, that could be the holiday rally bottom. Okay, the Santa rally, this is the type of season for it. Everything is bearish, 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 going into the next holidays. Okay, I'm talking about the next few months. It's a seasonal thing. It happens pretty consistently year after year. There's no guarantee it will happen again, but you have to consider that seasonality, right? Which means I'm watching these levels for bullish reversals, all right, which makes me very cautious as a short. Like I said, I'm not short, but if I was, I would be extremely cautious in being prepared to get out or reduce position or whatever if the reversal occurs in one of these areas. Now, if the reversal doesn't occur and it eventually works its way lower and breaks the support, okay, fine. Bearish scenario still intact. I mean, we do have a series of lower highs, okay, and I would anticipate a lower low. The question is not about, or the goal here is not to predict where the market's going to go. Again, that's what the obvious thing, conventional thing people think. Oh, you're telling me where the future of the market's going to be. No. What we're looking at, or we're preparing for particular scenarios. And either the market will show us one of those scenarios or it does not. If it shows us a scenario that you're prepared for, then you take action based on what you were preparing for. So for example, if you're looking for the bounce, you're looking for the long, you wait for the higher low, you wait for the confirmation, and then you go forward with your plan, whether that's to go long the NSX or long stocks that are highly correlated with the NSX, something like AMD. Let's see where AMD is today. Look, range bound. Right? Look at this bigger picture on AMD. AMD is dependent on the NASDAQ. If the NASDAQ sells off, AMD is probably not going to go very far, right? That's the relative strength. Look at this consolidation, higher low consolidation. That's a good looking long right there. If the NASDAQ finds a bottom, this would definitely be on the long radar, right? And something like this, with the NASDAQ behind it, a breakout would make sense, taking a breakout of this consolidation, because you have the stock market behind it, right? That's an example of relative strength. What about the S&P? Right, the S&P looks similar to the Nasdaq. This whole structure here, right? This whole structure from the peak is just a corrective structure. It's not a bear market. So a higher low or a double bottom is highly likely in terms of context and probability. That is what you need to pay attention to, not what people say. Not what all these experts on TV and all these other places, well, you know, the Nasdaq's going to sell off over the next year, blah, 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 right? It's all meaningless nonsense. Don't pay attention to it. Pay attention to the levels. Price does not lie. People do. So that's what I'd be preparing for in something like this. And there are plenty of stocks. I mean, I just showed you one, but there are plenty of stocks that are in a similar position. Any FANG stock, right? Let's just take a look at Apple. Any FANG stock, look at Apple. Is Apple bearish? This is not bearish. This is just a corrective structure, just like the Nasdaq. In fact, Apple is the Nasdaq. This thing gives you the higher low or double bottom. Apple is going to be another one, right? There's going to be a bunch of these when that Nasdaq turns, if it turns. So keep in mind, you know, Apple, Google, Facebook, all these stocks are what move the Nasdaq, right? Here's Facebook, all right? Not so hot today, but it's in a potential double bottom area, okay? There's no reversal candle, no reason to go long, but I would certainly be paying attention to this old support, right? Old resistance, new support, where it's fooling around right now. This might be another one if it turns and holds this area. The structure isn't very good, but if it takes out this lower high over here at 338, you may have something. And again, that would align well with the Santa rally. Okay, so let's talk about gold real quick. I see lots of questions and I'm going to get to them, so I appreciate your patience. Let me just talk about gold real quick, because gold is another tricky one. Gold is another one that people like to carry opinions with. Well, inflation, you know, gold. I watched a gold expert. He's been in the business for 50 years, and he said this. Right, none of them know anything, okay? Pay attention to price. So here's the thing. The other day, on NFP day, gold gave a buy signal. Right, you see that bullish pin, it was a bullish candle, took out the previous day's high, and then it closed not so good. This is a bearish pin bar. Definitely not what you want to see after taking a buy signal. Today, it took out the low of that pin bar, right? So there's actually a sell signal in gold right now. But here's the thing. Can you just isolate that sell signal and say, okay, I'm going to sell gold or I'm going to short gold? Well, no, you have to look at the context of the bigger picture, okay? Here's the thing. This is not exactly an attractive area to be buying gold. All right, you're sort of in the middle of this range, right? You have this midpoint range right there where everything is 50-50, highly random, not really worthwhile, right? The area to be considering gold would be this area here, which is what? 1720s, lower 1700s, and it can get there. Right? So I would not do anything with gold right now. I don't care what the experts are saying about blah, 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 blah. I would leave gold alone until it provides a better level, a more attractive level. Now, let's take a look at the dollar index, because the dollar index is a major component here. And this is the reason why I'm really not interested in gold. Look at this chart. Does this chart look bearish to you? All I see here are higher lows and higher highs. That's all I see. Not only that, but we're going for a breakout in the dollar. It looks like the dollar established a higher low on Friday, on NFP day, and look at today's candle. Not good for things against the dollar, right? The dollar is likely to break out here, and that is a sign of rising interest rates. So that means forget gold. I'm not interested in gold if the dollar is doing this, because it's going to put pressure on gold, silver, or anything that trades like this against the dollar. Let's take a quick look at the bond market. I had a question in the free chat room about bonds, about the TNT bond ETF. But let's take a look at this for a minute. Okay, this is the bond futures, the 10-year note, and the question was, what about a short in the bonds? Well, I've been talking bearish bonds for months. Because I've been seeing. I'm not a fixed income expert like you would see on some channels, but instead I've been looking at the lower highs and I've been looking at the lower lows. I'm like, bond prices are not strong. The chart told me that, right? Now we're at this lower low. We're at an important support level in the bonds, right here. Look at that. And here's the thing: is a short a good idea? Theoretically, You want to short something that's weak, but you're shorting into a support level. So I would rather not sell into a bottom, although theoretically it should make the lower low, it should break, which implies higher rates, which is why the dollar is going higher. Okay, but as far as putting on a trade in something like this, and this is what, if you're in something like TNT, which is the ETF, you should pay attention to this chart. Okay, the TNT chart is going to be sporadic and all over the place. This is the futures market. It's a cleaner chart. So the thing is, you want to wait for another lower high. Okay, that's the best thing to do, or the more conservative thing to do, in my opinion. You could take this trade if you want to short something like this, but where are you going to put your stop? Theoretically, the stop would have to go here, way up here at, what is that, 132.035, whatever the number is there. That's a lot of risk. Okay, so I would rather wait for a new setup, not short into the low. All right, that's like buying into a high. It's the same thing, like buying into a new high, and you run the risk of that thing reversing in your face. Wait for it to test or establish a lower high, kind of like what the NASDAQ and S&P look like. All right, so those are the major markets I wanted to cover. Let me get to your questions, because I see lots of questions here. Once again, I appreciate everyone's patience, and thank you for asking all these questions. All right, so let me jump over to this chat first. I promised some people I would answer their questions first. Hey, Elijah, it's good to see you. I've been waiting for more than a month, okay? I understand the risk was high, but BTC at this level was not a good pullback. Right, so let's go back to Bitcoin. So the thing is, this is where, like I said, patience comes in. If you don't have patience, this is going to be very hard to sit through. The best choice in these type of situations is be an investor, because as an investor, you are in the market all the time and you will participate in these moves. Short term is going to be harder because it requires waiting a lot of moves out. The risk is very high. The risk was very high all along. It's just the market just keeps going higher. Okay, but the question is, are you willing to take the risk? We're not going to send anything out if we're not willing to take the risk. We're not like these guys that just send out ideas just for the sake of sending them out, because their outcome will be random. So the thing is, I want higher probability, and like I said before, I'm not interested. If this thing wants to go straight to 64K, I'm not going to be in it, because I'm not willing to take the risk. All right. Now, occasionally you take a trade like that, it may pay you a little bit, and you're like, oh, that worked out, that was good. But the next one you take, or somewhere along the line, you're going to get caught, and you're going to give it back anyway. So it's a waste. It's like a waste of energy and a waste of time. So that's what I have to say about that. So do you have a new trade idea? No. Do you think it's a good strategy to step in front of it with orders at 53K? No. Not stepping in front, no way. Because again, there's no way to know. Look at this pin bar from yesterday, or whatever. This pin bar. If you now looking at that, you'll say, well, if I had put an order there at 52K or whatever, I'd be in this. It would have tapped me in, and look, it'd be nice and green. That's true. But you remember this candle back here, right? That was a, 12,000 point candle? What about all those orders that got caught in that and then got stopped out because they were, they just stepped in front of it, right? That's the risk you face. So I would not put any orders in advance, like limit orders for swing trades. If you want to carry inventory and you want to put limit orders in for inventory, what will protect you on that is the smaller size, okay? And that's going to be a function of your overall amount of money that you have to invest. So that's the only way to play that game. Otherwise, if you're going to try to swing trade it, no way. The likelihood of getting stopped out is very high. Like this candle alone moved, 5,000 points or whatever it was. Anyone that had that stop at 53K would have been tapped out, at the stop that I suggested, and look where this thing is now. So it's not worth it. Okay, anyway, hey Schwartz, good to see you. Okay, so Robert Kiyosaki, news about biggest financial, right, those guys. Don't pay attention to guys like him. I'm very familiar with him. I'm familiar with his work. They're not market timers, okay? They just, and what also, they like to motivate people with fear to get them to buy their products. So don't pay any attention to it. It's nothing. It's meaningless. Okay, they'll talk about that for years. Well, there's going to be, the Fed is going to run out of money and there's no gold in Fort Knox and all kinds of other nonsense. And the market's just going to do what it wants to do anyway. So don't pay any attention to that stuff. He's not the person to provide good market timing, suggestions. So anyway, thanks for asking. Why is BTC? Okay, so Bitcoin, in this situation, it's unusual to see Bitcoin doing something like this. And then when you look at some of these altcoins, right? Let's take a look at Litecoin. Litecoin isn't, look, it's not really doing anything spectacular, right? How about some of the other garbage coins like AVA? Look, AVA, not really doing anything at all. What's going on with these? What is up with these altcoins? So the thing is, I don't ask why, because why is not really a good question to ask. It's really, for me, it's all about the risk. But one explanation that I can think of is when you have a rate of change that's sharp, like in the base currency, like in this case, Bitcoin, and no one is buying the other currency, I'm sorry, not the base currency, the counter currency, and no one is buying the base currency, well, then obviously the base currency is going to get cheaper. It's like euro against dollar. If dollar goes up faster than euro, okay, or whatever, then euro, the pair euro dollar will go lower. So that's the thing with that. When you have a cross pair like euro pound, for example, and euro and pound is going up faster, they both currencies may be going higher, euro and pound. But if pound is going higher faster than euro, the pair euro pound will go lower. Okay, so that's the thing. That could be one explanation as to why these altcoins aren't responding. It's because no one's buying them, and Bitcoin is appreciating at a fast rate at the moment compared to the base pair, you know, like AVA, for example, or some of these other altcoins. Okay, but again, the question is, it doesn't matter why. When it comes to short-term timing, it really matters where, right? You're only interested in location, price action, and structures. Why is not going to help because that connects you to logic, and markets are not logical. All right, so let me jump over to the chat. Again, I appreciate everyone's patience. I'm sorry I'm behind today. Let me see what we got here. Hey, oh yeah, by the way, if you want to mention what country you're from, or what city you're from, and that is, I usually specific to TradingView because I get people from all over the world there. On YouTube, I get also, but TradingView, it's really like all over the world. So if you want to put, that's just a fun fact. Anyway, I'm broadcasting from the New York City area, greater New York City area, northern New Jersey, in case you were wondering what my accent is from. All right, so greetings. What do you think of Beam USDT? Let's take a look. Beam USDT, real quick. All right, so first of all, first thing I see, first thing that catches my eye is this, okay, which tells me hype, herd mentality, nonsense. That's what that tells me. There's probably a chat room somewhere or something that's pushing this thing. That's the first thing that I see. Second thing is you have a resistance right here at, what is that, 81 cents? Okay, and you're below that resistance. This thing, if anything, could be in a range, like consolidation. You have your range low over here, and this thing basically is coming off of its range high. You're nearer the midpoint of the range, all right, which is this area right here. So as far as that goes, I don't like the general location of something like this. You might as well wait to see if it can test this old resistance or possible new support, which is located in the middle of the range around 62 cents. But the thing is, price action is likely to be very highly random in this area. So the more conservative thing to do would be to wait until price can test its range low. If it can test its range low, that would be a more attractive place for some type of position, perhaps a swing trade long or something like that. And that's it. I mean, I'm not a big fan of inventory or investing in many of these because I think most of them are garbage. So especially if it's like some kind of hype coin, which this looks like based on what I'm looking at here, I don't really have much belief in these things. So if I'm going to invest long term, I'd rather pick a leader like Bitcoin or Litecoin or Ethereum or something like that. Not these penny stocks or penny coins. Anyway, so that means swing trade, right? And this is not at a good level for a swing trade, especially after such a pin bar, right? That means a lot of people are likely caught in this position. And if Bitcoin pulls back, which it's in a position to do with this relative weakness, I would anticipate a test of support, which is what price is that? 53 cents or around that 50-cent area is likely. All right, and then you'd have to wait for some sort of confirmation there. Now, I mentioned Bitcoin as the leader, as the guide, and I'm looking at relative weakness here, right? Keep in mind, if there's specific news on this thing, which a chart will not help you with, then, they can get this thing going, right? The herd mentality going, running out of some chat room or something like that, right? And you have to understand when the herd mentality is in play, you have to understand what's going on and how to get around that if things turn on you. Because when you have a situation like this and people get caught in that, you don't want to get caught in that. All right, so that's why you need to be aware of that sort of thing and understand the limitations of charts when it comes to that type of situation. Anyway, thanks for asking about Beam. All right, let me jump over to the other chat. Elizabeth, hey, thanks for stopping by. It's always good to see you. Ethereum. So let's take a look at Ethereum real quick. I was just mentioning Ethereum as, you know, one of the leaders. That's Litecoin. Let's go to Ethereum. Here's Ethereum right here. So now Ethereum, again, look at the location. So we have the recent structure is attractive, right? But look at the location. That's a resistance. No different than Bitcoin. The current candle is a bullish candle. If it takes out the high of that candle tomorrow, then this low right here will be a higher low. Okay, so that's bullish structure. And I would anticipate a higher high. Your next resistance is here, which is what? What is that? Basically 4,000. Okay, we'll round that to 4,000. That's what you're potentially looking at. So the question is, if you're going for that breakout, what is the risk? 33.73 is the low, so about 33.50. You're probably looking at about 200 points of risk, and you're going for, if you're buying this thing at 36, yeah, so you're looking at about maybe, let's say 250 points of risk to make maybe just over 300, maybe 350. The reward risk is attractive if price can make it into this area, if it can get there, right? The structure supports the idea. The problem is if Bitcoin pulls back, this thing can fake out. So if you get that type of setup and you get the buy signal and you want to go for it, understand what the risk is, but more importantly, understand what the market should not do if you get into it. So meaning it breaks out, right? You buy it at, what was this price over here? Let's say that you buy it at the break of this high, 36.25, right? Let's say you buy it 36.50 and it goes to 37 and you're like, all right, cool, this thing's working. And then it turns into a pin bar right there, or some kind of, or maybe that one holds green, but then the next one turns into something bearish, right? A pin bar especially isn't something you don't want to see. That's where you have to consider an adjustment. That's the key to this, right? We could sit here and talk about buy signals all day and say, yeah, right, it should do this, it should do that. The question is, what if it starts out that way and changes? That's what you need to be prepared for. Anyway, but the general structure is bullish, and you may get that breakout type of buy signal. It's just understand the location where you are and understand that there's a good chance that this thing fakes out because of the location. And of course, I would be expecting Bitcoin to be doing a similar thing. Okay, so thanks for asking. Let me jump over to the other chat. Hey, boss, good to see you. There was an hour or two period. Yes, okay. Is there a general way to explain? Yes, okay, so boss, very interesting thing you mentioned there. So that I was actually writing I had just published my TradingView article, right? And I was just talking about a scenario similar to this, and I look at the price, what is going on here, right? And the way price action took place was practically how I described it like an hour before. I thought that was just wild, right? Anyway, so how to explain something like this to a newbie? Well, the thing is, was it a mega whale moving a bunch of coin? You know, we could sit here and we could talk about conspiracy theories and all that. It doesn't matter why. So let's focus your attention on what matters is what. Because when you see a move like that, again, you're going to grasp for the obvious, right? A lot of these gurus or experts, you know, when this candle was red, because at one point for an hour there, that candle was red, right? At that 51K bottom. You're going to have all these guys coming out, oh, Bitcoin's a short, oh, Bitcoin's going to 40K, because they're all reacting to the obvious. Meanwhile, this is a support level, okay? And if you look at your bigger picture, I've been talking about that support level for what, 2 weeks now or something like that. So it went there, touched it, and reversed. So it doesn't matter why. It could be any reason. Markets are highly random. What matters is where they go and how they behave when they get there, right? That's really the thing. And this is a very tough type of trade to take unless you're in a day trade. If we look at smaller time frames, we'll find something in here to take something like that. But a day trade is a much different mentality, and it's also a much different risk profile. If you don't understand those things, don't even think about day trading, because what you will do is you will get caught in something and take a lot more risk than you should, and we know where that goes, right? So anyway, so that's the main thing. It doesn't matter why. It doesn't matter why a market moves. We're always looking for a reason, and that's how the news makes so much money, because they always point fingers. Oh, these day traders. Oh, algo traders. Oh, a whale. Oh, this. Oh, that. Right? It's always something, but none of that really matters. What matters is if you're prepared for where it can go next, that's all that matters. And we're in an area right now where it can, where selling activity would be more, this is an attractive area to sell, not to buy. That's all you need to know. Okay? Anyway, thanks for asking. It's a good question. I'm not trusting this. Okay? All right, hey, no problem. And I feel the same way. And it's, for me, it's not about trust. It's just I know the level, and I know the probability around the level. I'm not willing to take the risk. That's really what it sums up to. Are you willing to take the risk? Some people are. Some people were willing to take the risk here. Okay, I talked to some people. They took the risk here. That was a great place to take the risk. Okay, so that's really the place. I talked about this in a TradingView article, this area right here. It was a tough spot to take risk, but if some people took the risk, okay, it worked out. Doesn't always work out that way. This spot right here, by the way, if you used a tight stop over here, would have actually stopped you out. And you would have to have gotten back in based on the candle structure that I talked about, right? Because it just took out that candle low and then reversed in everyone's face. So it's about the risk. And how flexible you are and how much attention you can give these things. A lot of times I won't take a trade because I don't feel like babysitting it, because it requires a lot of attention. I like areas that I know that don't require a lot of attention, okay? Because I got a lot of stuff on my plate. Anyway, so good question. Let me move back to the other chat here. I know I'm not going to be able to get to everyone's questions, but I'm going to try to get to as many as I can. Let me see. Mr. Plow. Can you have a look at XRP? Yeah, let's take a look. XRP, USD. So look at this. Interesting, right? Something like XRP should be doing well right now with Bitcoin. As you can see, I have a line on this chart. We must have analyzed this in a previous session. That's a resistance area, okay? Because that line is obviously based on this congestion over here, which I remember talking about. And people are selling there. Clearly, there's a bearish pin bar that's established right now. With Bitcoin on its high, this thing should be showing a green candle. It's not even showing a green candle. In fact, it's about to take out, or has taken out, yesterday's low, which is what? $1.1269 or whatever. And right now we're at $1.1303. So it looks like, what's today's low? $1.1257. So it barely took it out, which is a sell signal. Now, that's not a good sign when your market is showing a sell signal, while the main market, Bitcoin, is on its high. That means this is relatively weak. So if Bitcoin pulls back, I would expect this thing to pull back faster, okay? Now, with that being said, so that's the relative strength perspective. This structure that we have, right, you have a higher low over here, you have this higher high. I mean, that's a bullish structure. So in that regard, buying into a higher low structurally makes sense. Okay, we're not at a higher low right now, but if you can get to like 9, what is that? 9.5 cents basically. If you can get to this area and you can get a buy signal in that area, that would make sense in terms of structure. Even if it goes slightly lower, right? You still, if you're getting some sort of higher low somewhere in this area, that would still make sense for a swing trade at least. But the thing is, you have to be careful, because if Bitcoin has a more significant pullback, these things are going to get hammered, especially when you have a head and shoulders, right? There's a shoulder, you have a head. This could be a right shoulder. I don't put a lot of emphasis on those chart patterns, but when it's there and it's pretty clear, you shouldn't ignore it, right? So, but I'd be willing to give it a chance as far as the higher low is concerned. You know, if you're swing trading this thing, otherwise there's nothing to do. Okay, if you're really more interested in inventory, it's probably a better idea to wait for more dramatic prices, which would be something like this. What is that? I can't even read the number. Like 9. This is like what? 98 cents, or no, I'm sorry, not 98 cents. Yeah, it's around I can't read the number. Hold on. Yeah, around 98 something. Okay. What was this one up here? This was I'm sorry, I think I read the wrong number. So this area up here would be $1.09. That's what I meant, $1.99, blah, blah, blah. Okay, I forgot to put the dollar in there. So that would be this high or low. Something more dramatic would be below $1 on something like this. Again, that would be more of an inventory or investment type of trade. Okay, but general structure, okay. If this thing breaks supports, this thing breaks this area right here, then it's a good idea to stay away from it. Okay, or you want to continue to accumulate and take smaller bites until it finds some kind of low. The problem is with that game, these are not investment grade assets. Okay, people convey, when you watch all these other experts and blah blah blah, they make it seem like altcoins and Bitcoin are not really speculative. It's like they're like stocks. No, they're not like stocks. So many of these coins are not going to perform, or they're not going to do anything spectacular. They're probably just going to linger around nothing for a long time and go to zero. Okay, that's the majority of them are likely to do that. Which ones? There's no way to know. But they don't solve any real world problems, and they don't provide any real value. It's all perceived, and they're not an investment grade stock. So that's why, I have a problem with long-term investments on most of these. It's like gambling. If you're into looking for a lottery ticket, okay, and then you throw a little money into a bunch of them, and then you see which one pays off. But if you think you're going to throw $100,000 into one of these and you're going to be a billionaire, blah, 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 that's all just a dream. And you get some occasional guys that randomly just so happen, they bought, 1,000 Bitcoins when Bitcoin was, 50 cents because they were buying pot for their friends or something like that. And now everyone thinks they're a genius. So that's just a lottery ticket game. All right, anyway, a chart is not going to help you figure out which one is going to do well in the future. So thanks for mentioning XRP. All right, let me see what else I got here. I know I rant too much. I gotta move quickly here because I have a lot of questions. All right, so Paul says it was just Bitstamp. Okay, I don't know. I mean, was it just Bitstamp? That's interesting. What does it mean? One of the exchanges adjusting their balances? Yeah, I didn't even know that was just Bitstamp. I mean, let's take a look at Coinbase real quick, right? Well, that move yesterday, because I just assumed that was across the market. Let's take a look at Coinbase. Does Coinbase have a similar move in it? Interesting. No. That's interesting, right? That was just Bitstamp. What's up with that? There's no long tail on Coinbase. Yeah, I don't know what that was about. That's what you're dealing with these things. That's very unusual, okay? So who knows? Maybe someone will make a YouTube video about why. But that's interesting that it was just Bitstamp and nowhere else. Okay, so good question. Good for some more conspiracy theories. What about SHIB? I saw some hype on SHIB USDT. I saw some hype on this, right? I guess Elon Musk stuff is going on with this, because I saw like a video title about Elon Musk, his name was in it, and SHIB. So look, this is what I mean about herd mentality. Someone had asked about this the other day, and we talked about this pin bar, and I said, these kind of coins, when they're wild like this, and you get the bearish pin bar, sometimes, it reverses again and works its way higher. Well, you have that kind of situation here. If you're going to play this game, if you go for this breakout, which is what we're trying to do right now, this would be the breakout right here, right? And you have a higher low established here. I mean, the numbers are like 0, 0, 0, 0, blah, blah, blah. So I'm not going to read all those numbers out. But if you take something like this, okay, a couple of tips. Not a good idea to throw a lot of money into these, for one, because again, you may get caught at the top, right, in this area right here, and it may fake out again. For two, if it does go, right, if it does something crazy, you want to be prepared to take money off the table quickly, all right, because the thing is, there's no way to know how far this is going to go. People are probably saying, it's going to go to $5, and it's going to be the next Bitcoin, or whatever they're saying. I don't know what they're saying. So the structure is bullish. You just have to be prepared to get out quickly on something like this if you want to go for it. I don't suggest these coins, especially for beginners, when they do stuff like this. Because again, what are you doing? You're grasping for the obvious. It's strong. It's going to go higher. This thing is going to go to what that fake guru was saying it was going to go to, and blah, blah, blah. And I could make $1 billion and this and that. Well, most likely where this will go, just like all the others, right? Let's take a look at this one. Look at this. This was doing the same thing, right? Oh, look, Solana is going to be the next blah, blah, blah. Solana is going to overtake Ethereum, blah, blah, blah. And look, it's doing nothing now. It's garbage. So what about all these people that bought up in here and didn't get out because their favorite guru told them, just hold on to it. You can retire on this thing. Well, now it's consolidating, right? Which, who knows, maybe it'll find some sort of support, but there's nothing there now. And more importantly, what if this thing breaks the support here at this range low? What if it breaks that? Now you're going to have a lot of people stuck in this thing. They're going to stay in hope mode because their favorite guru just says, just hold on and have hope, right? And you watch this thing go all the way to zero. All right, that's what I mean. So don't get sucked into that. Be prepared for the wrong signal to show up. So back to your, what was that, Shib, right? The wrong signal. What do you not want to see here? What you don't want to see, if you take this breakout, is you don't want to see a bearish pin bar develop there. Definitely not. And like I said, you may get shaken out and it may reverse back in your face. You need to be flexible with these things, okay? And you need to work with it. But at some point, when the hype comes out of it, and it's out of play, it will break these supports. And when it does something like that, and you're in it, the best thing to do is to take the loss as soon as you can and make that loss as small as possible, okay? I mean, that's the game you're playing there. So anyway, that's Shib. All right, let me jump over to the other chat here. Thanks for asking about that. Man, I'm so behind. I appreciate everyone's patience here. Okay, so that was Elizabeth. Okay, Mr. Plow. Hey, HS, good to see you. Peter, I'm just catching up here, so I apologize. Let me see. Go back to Peter here. So where are you, Peter? Okay, from Slovakia. I'm curious about DOT. All right, DOT. So let's take a look. Again, what are we noticing here, right? We're noticing Bitcoin is on its highs, and these things are not. They're coming off their highs. So it doesn't matter why. What matters is you don't want to be buying this right now, okay? Not a good place to be buying. If you're in it, then I don't know what to tell you, because this would really be a good place to lock in profits if you have not, if you're in from lower prices. The levels on something like this, someone had asked about this previously, maybe it was you. The level here, this is your support right here, 27.13, right? That's your support. This thing right now is at 33. You have the midpoint, okay? The midpoint is a possible area, but like I always talk about these midpoints, they're highly random. So I'm not a fan of looking for longs in that area. I prefer nearer the range low. That's a higher probability. The market doesn't always deliver that opportunity, so I'd rather find something else. Again, I'm talking from the swing trade perspective, okay? Not from the investment perspective. So that's all I could say about something like this. You have a double top basically being established. And the worst part about this is, yes, you have a bullish argument. There's nothing bearish about the higher lows and higher highs, okay? But relative strength-wise, it's lacking. Bitcoin on high, this thing double top, relatively weak. So theoretically, if Bitcoin pulls back, this thing should pull back. And that's, so for those reasons, for one, I would not be looking for longs anytime soon. And this thing would have to either test that range low or develop a higher low somewhere between here and that low, break out, and then give me a higher low, right? Again, as a swing trade, because investment-wise, you know, this is just one of those other ones. Anyway, thanks for asking about DOT. Let me move along here. Bart, okay, Bart from Uruguay, mucho gusto. Okay, cool, eager to, okay, cool. Today I closed MSTR. Okay, no problem. I hope that worked out for you. Okay, Ying, greetings from Barcelona, mucho gusto. There's a sharp blip, right. So that was the Bitstamp, all right, so we talked about that. Traders see it as a warning. So, you know, talking about Bitcoin. So, you know, again, just to touch on that, if that was specific to Bitstamp, that's strange, but it doesn't really mean anything. I'm not going to really interpret that as anything because the structure hasn't changed here. The supports are still the same, and we're at a resistance. That's all that matters to me. Here's the thing. Less is more in this game. I say this all the time. The less information that you can make a decision on, the better when it comes to financial markets, because markets are highly random. So you really need to think more like a poker player, not some kind of, oh, I'm an economist, or I'm an engineer, and I know a lot of detail, and blah, 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 blah. Right, for maybe in those businesses, more is better. Not in this business, not in market timing. So the more simple you can make your decision-making process, the better. And that starts with eliminating all the garbage from what you're consuming. That's why I pay attention to no news. I have no idea what's going on. I only pay attention to price, because whatever's going on in the world, price will factor it in for me. And all I have to do is look at the levels, right? And look at the trend and look at the context, and I can measure my risk that way. That's all I'm interested in. I have no interest in news. I could care less what's going on, because I know it's meaningless. And trying to follow that and trying to grasp onto the obvious because there's some sort of need for control or for certainty is just it's a losing game. All right. Anyway, and I don't mean to sound discouraging, but that's the reality of financial markets. Everyone else sells dreams and hope, but I'm talking reality here, and it's definitely not pleasant. So let's see what else we got here. Thanks for asking. Hey, Sean, good to see you. All right, from Whidbey Island, Washington. Good to see you. Thank you. He's a member anyway. Thanks for stopping by. Dwayne, do you think we've done a fifth leg? Okay, good question. Talking about Elliott wave. Have to retrace before going higher. All right, so you mentioned Solana and Luna. Let's just pull I talked about Solana there briefly. Let's talk about Luna. So he's asking about a fifth leg, right, or wave 5, which I've been looking for those. If you can count clearly 5 waves in something, that usually means a corrective leg is around the corner, right? So let's see. We can count this little area here as wave 1, wave 2, big wave 3. This is wave 4, this whole section right here, wave 4, broke higher. So in wave 5, 1, 2, 3. Well, no, this is still 1, 2, 3, 4. No. Elliott wave is very subjective. So what I like to do with Elliott wave, for one, is I try not to make it very complicated, right? If it's not clear, if it's not crystal clear, then I just dismiss it and I look at levels and I look at other things, because Elliott wave, while it can help you when things are crystal clear, it can also plant the seed of an opinion when things are not clear, and it can be very confusing. So in this case, I can't clearly count 5 waves. I mean, this looks up to 3. I mean, I guess we can argue this is a 4. We can say this is a 5. If this could be, this whole mess right here could be one big corrective wave. It could be a broader wave too. And you say, well, how can that be? It made a higher high. But sometimes you have these things called running flats, right? That's an Elliott wave term. And sometimes that running flat will make a higher high. It's still a corrective move though, which means this thing, this thing could be more in corrective mode. It's possible. So that's how I would read something like that. And there's no buy signal right now, clearly. And you're at this potential, this minor support, old resistance, and nothing is happening here, right? There's no green candle developing, no bullish pin bar. So I would just hold off on something like this. Now, we have to retrace before we go up again. I would agree with the retrace and look for the support levels, okay? And you have a level here, which is what? $33, right? That would be one level to keep an eye out for. But the more attractive level would be the range low. This would be the best level if it can get there, and that is $25, okay? Again, there's no way to know if these markets will test those levels. But with the Bitcoin weakness, the relative weakness, if anything, Elliott wave aside, I would not be going anywhere near these things, okay, with this type of weakness. And you mentioned Solana. So, I mean, I mentioned it before, but let me just see if there's any clear wave count there. And this is a little bit different, right? We can count 1, 2, 3, 4, right? Fives could look like this, okay? So if that's a gigantic wave 1 up here, you have your wave 2. So this wave 2s are not always a simple ABC correction, right? They can be some sort of consolidation, and this fits that argument, right? This could be some sort of consolidation, some sort of triangle, like a 5-wave triangle type thing, and they could be made up of 3 individual wave legs like this. Look, A, B, C, like that kind of thing. A, B, C. So that's a consolidation. So it could be a broader wave too. To answer your question, yes, they're in corrective mode. Now, just because something is in a wave 2 or a wave 4 doesn't mean it's bearish, as you know. You're just looking for the supports because the broader structure is bullish. And the next wave should be a 3, theoretically, which would be a very large magnitude wave 3, which is very bullish if that can follow through. Now keep in mind, this structure, at the moment, that's what it says. If these supports are broken, okay, and you see this price much lower, then forget that wave 3 idea. All right, that's how you have to adjust with Elliott wave. All right, so it looks promising until something breaks that shouldn't break. Anyway, thanks for asking. Let me move along here. So I answered Shib. Hey, is it possible for the story to be repeated in an instant? Okay, I'm not sure what you mean by that, Saeed. Maybe you could be more specific. Let me see here. Probably one of their big traders found a load of stop loss. Yeah, so again, everyone's talking conspiracy theories with that Bitstamp situation, right? And again, who knows? The thing is, it doesn't matter, right? It doesn't matter why. So stop asking why. Or I should say, it's less effective to ask why and more effective to just ask where. That's all that matters, because there's no way to know the truth, the reality, right? Unless Bitstamp wants to address it, and they can even lie about it, right? Whatever. So we'll never know the reality of it. And even if it repeats, there's no way to know. There's no way to spot something like this in advance, right? A chart's certainly not going to tell us about it. So why, just to fulfill our curiosity, why does it matter why? But if you know your levels and the market wants to do erratic things, well, at least you know where your probabilities are. Okay, like you should know that 51K, 50K, 49, 48K, those are potential buy levels, and buying activity should appear there, right? It's more probable for that to happen. So at least you're prepared for buying activity. In this case, it would be on smaller time frames. Okay, boss, I still don't get it. If you look at the total went okay in 1 hour or two, and it happened across all coins. All right, again, boss, there's nothing to get. It's just, that's the nature of the market. Just accept it as random nature of the market. It's a lot easier, because I mean, to answer your question, I don't know the answer to your question. And I don't search for those type of answers. I know better now not to. You're just better off paying attention to what's going on next. Okay, so I'm sorry I can't answer your question. OptiC, I like, okay. Yeah, that's funny. Okay, let me jump over to the other chat. Okay, so I answered. Okay, David, good to see you. Hey, Monica, nice to see you. Okay, I covered ETH. Okay, let's see. FTM USD. Let's see. FTM. So similar situation as some of these coins. You have a higher low right here. Okay, so I mean, that's a bullish structure. If this candle closes like this and you take out the high of the candle, that would be a long signal. But the question is, do you want to buy it at this potential high? These look like all-time highs, right? I don't see any history here. So the thing is, there's no point of reference going up into these prices. You have to be willing to take risk and see where it goes, right? Your low is $1.96, so basically just below $1.95, that area right there. That's where you're going to define risk from. And if you take a trade and it goes to that price, you should probably take the loss, right? You don't want to get caught in something that's going to test much lower supports. That's the risk you have to be willing to take. If it breaks higher and goes, well, then at that point, you want to try to follow it with a manual trailing stop and see where it goes. With these type of coins, like I said, you don't want to throw tons of money at these, right? I mean, so you have to be careful, especially if you're using leverage. I'm talking from the swing trade perspective. All right, thanks for asking. Let me see what else we got here. Okay, hey Kim, good to see you. Beyond Tech, what is that? Is that a coin? Let me type it in. Okay, so I guess it's BNTX. It looks like a NASDAQ stock, I'm guessing. All right, hopefully I have the correct symbol there. Let me know if I don't have the correct symbol. So it looks like we've looked at this before, because I have lines on my chart. Now, something like this, again, your support levels are where these lines are, okay? Right here, what is that? 200, around the $200 area. This is where your support is. Right now, at the moment, it's established a lower high, and it looks like it is about to take out the low, yesterday's low, Friday's low. Not good if you're long. This is not what you want to see, a lower high. Theoretically, this should make a lower low. So I would stay away from this thing for now. There's no reason to get involved in a long. There's no stability here. There's no reversal structure here. yeah, I would just stay away from it. Nothing to do here. Now, keep it on the radar if you're looking for, if you believe whatever the stock does and they're higher quality. Sometimes that's the irrational nature of the market. A higher quality stock gets beat up because from whatever reason, it doesn't matter the reason. It eventually finds stability and support and eventually breaks the structure, the bearish structure, okay? And in this case, you want to see this lower high get broken at 257? So 260 area, that's your lower high right now that's in play. That needs to be cleared. And if you can clear that, you may start seeing a renewed bullish structure, higher high, higher low, right? And that's when you want to start getting involved, when that type of thing is going on. Instead of trying to find a bottom here, which can just keep breaking. The supports can keep breaking right now. That's what the structure favors. So thanks for asking about Beyond Tech. All right, let me see what else we got here. Just going through the chat. Again, I appreciate everyone's patience. Thank you for waiting till I get to your question. I just have so many to answer here. All right, let me jump over here to the other one. The higher low you mentioned is not valid. It can be validated once a lower low is established. Not valid? Okay, I'm not sure what you mean by that. But if you're talking about Bitcoin, the higher low on Bitcoin, it's there. It's a higher low. And let's see, some exchange selling, okay. Lower high, lower high. Lower high, okay, I'm not sure what you're referring to. Maybe it could be more specific. All right, Boss Hog, I agree. It could have been a higher low, stay, okay. What is your take on XTZ? XTZ, again, I appreciate everyone's questions. So, XTZ, this is interesting. So look, all these altcoins are pulling back. What makes XTZ interesting is you have an old resistance, new support area. So attractive location, all right? Now, you do have some structure that's working against you. That's a lower high. So you're pulling back into the support area. Good place to start paying attention for longs, but too early for any type of long, especially with this lower high in place. So what you want to see here is some sort of reversal. Now, if you get a single candle in this situation, like a bullish pin bar, or maybe you get a bullish inside bar tomorrow or something like that, okay, that would be welcome here and that would establish a higher low. But the thing is, you have some conflict because you should not really be seeing like a lower high like this, okay, in this area right here. So you have to decide if you're willing to take that chance that this corrective structure is going to no longer be in play. You have to be willing to take that chance if you see the single reversal candle. If you want to be more conservative, you can wait until you get more of a stability type of pattern, like a double bottom. So you let the market try to rally a bit, you let it retest this low again. That requires a lot of patience. That may take a couple of days, okay? But if you get that type of opportunity, that would be more attractive than buying a single candle now because you have a lower high. Remember, lower high leads to lower low, usually. Eventually, if this broader structure is going to stay intact, right, the broader bullish structure, then this thing should eventually resume that broader trend, which means this corrective structure will have to break. It will have to no longer be in play, right? So another conservative scenario is you wait for the stability and then you wait until this lower high area is cleared. And then you start looking for higher lows after that because you should be looking within the context of a bullish structure developing, right? Again, something like that can take a month or a few weeks to develop. But the general structure here is bullish. And the other concern is Bitcoin. With Bitcoin on its high, these things should not be showing red candles, which means they're likely to push lower if Bitcoin has even a minor correction. That's what the chart says. All right, so anyway, thanks for asking about XTZ. Let me jump over to the chat. What do I have here? Olga. Okay, Erhan, good to see you. Thanks for stopping by. All right, Olga, can you check AR and Coty? All right, let's check AR. Is AR a stock? Let me see. Antero, or is AR a coin? I'm guessing it's a stock. It must be a stock. Let me see. Well, it could be a coin too. All right, yeah, maybe you could be more specific because I'm not sure. Maybe, let me see. Is Coty a coin? Let's see. Yeah, all right. So I'm guessing AR is a coin then. It's probably not the stock. All right, so here's the thing. If you're talking about AR, the coin, triple top. All right, not a good place for longs. General structure bullish. Yes, you have all that. But what is likely to occur here, because of this location and because of where Bitcoin is, right? You're in a range and you're near the top of the range, possible going back into the middle of the range. So this is definitely one to stay away from until you test the low of the range. This looks like another coin we just looked at before. The low of the range is $40. So you want to see something in the low 40s before becoming interested in this thing again. Now, that doesn't mean it won't find a higher low sooner and then break out. That's always a possibility. But with the relative weakness coming from Bitcoin, meaning Bitcoin's on a high, this thing is coming off a high, what happens to this if Bitcoin pulls back? Okay, so looking at just at levels and structure, your better levels are going to be the lower part of the range, possible somewhere in the middle, but you have to look at the risk at that point and decide if you're willing to take that risk. Like I said, with a lot of these, even the swing trades are tough to justify sometimes because of their lack of movement and stuff like that. And I'd rather, if I'm going to take a swing trade, I want something that moves, okay, that seriously moves. I mean, this isn't too bad, but I'm just saying there's some examples out there that it's like, man, there's just better coins out there. All right. Now you asked for Cody. If you could just ask in a separate question, because I want to try to get through more questions here. So let me see what I got here. Bart, can you check XIACF? XIACF. Let's see, what is that? Xiaomi. Okay, let's take a look. First thing I want to see is the general trend. Well, that looks generally bullish. Okay, higher lows, higher highs. Recent price action, though, has been more of a consolidation. Okay, fine. And we're coming off of a range low, which is a broad higher low relative to the bigger picture. All right, so not bad, okay, not a bad location. Let's look at the price action. Looks like it's trying to, gave you this little, this is a mess. These candles are a mess. They look sporadic. I don't like when they look like that, but all right, fine. You know, maybe it's a low volume stock. It's OTC. Okay, yeah, that makes sense. So I can't really go by this little mini structure here, but it's coming off of a notable support. So you're going to have to measure your risk from the low, which is $2.59. You might as well round that to $2.50. And that's where you would basically, if you take a long on something like this, you're buying into a good area. Now, something like this is also not going to be highly correlated to like the S&P, so you don't really have to worry about something like that. First target would be somewhere in the middle of the range, right? A good place to get out of stuff. What's that? Around 3.25. So if you're buying this, if you're risking about 25 to 50 cents to try to make $1 or something like that, or more, if this thing could work its way to the range high, it's worthwhile reward risk wise. And you're buying into an area of a broader trend that's generally bullish, and you're buying a range low. So you have all that working for you. The thing is, if it takes out your stop, take the loss, because it shouldn't do that. It should not go back to that stop if this support is going to be meaningful and hold and structure reverse from here. If it takes out the stop, that means it's going to find some lower level. Okay, so just something to keep in mind there. Now, I had a question in the other chat room. I just want to cover, the guy asked me for like 20 symbols, but I want to at least get to one of them. I remember two of them, but I want to just answer one of them now. Actually, he talked about the bonds. I talked about that, but there was one. It was an energy stock. Oh no, HSI. Right, China. He said China long. So HSI, which is the Hang Seng Index. All right, let me see. Is there a CFD on this thing? So HSI, and this is why I want to go over this. Right, Hang Seng Index. If there's a CFD on this thing, you know, you get the idea. You could work with this chart anyway. So this is basically saying China. He's saying China long, right? And here's the thing. Look at the situation. Buying this thing now is not a good idea. And the reason is, again, where were you at the double bottom, right? That was the place to be thinking long, not here. This is a potential area for a lower high. All right, just like the NASDAQ and S&P have established a lower high today, something like that. So no, not a long. In this type of situation, you want to wait for the higher low. So wait for a pullback or maybe a test of the low again. If this establishes itself as a lower high, which would occur overnight, you know, my time, then I'd be anticipating the lower low, because all I see here is a series of lower highs and lower lows. Okay, the bigger picture, you can argue, is bullish, right? This bigger picture, but this structure, the corrective structure, is still in play. So maybe you get the double bottom, maybe you get the higher low. That's what I'd look for in something like Hang Seng. All right, so thanks for asking about that. Definitely not a long here, too risky. All right, let me jump over to the other chat. That was XTZ, but now signal to watch out for. Okay, GBP, Jude asks. Pound. Oh, I got a Forex pair here. Okay, I was looking at this earlier. Pound is a short. Okay, very clear, short. Bearish pin bar. All right, now this thing, I think it closes in an hour or something like that. My time, the candles actually close. So the close of this candle, what's this thing, 35.90? If it takes out the low, which is 35.84, that's your sell signal. Look at this bearish pin bar lower high. I mean, that is that's a signal right there once it takes out the low. Okay, so that would be a short. Your stop on something like the pound would have to be, typically the pound is 100 pips, for a swing trade. It's 36.73. So you're looking at about a 90 pip stop, right? Or a 100 pip stop. That would be up here somewhere. Now, the pound is tricky, and it can go up there, tap you out, and then turn again, right? This thing's, as you can see, recent price action has been kind of all over the place. But this is a lower high. There's a sell signal developing there. So, and also the other thing about this is, what is the reward? If you have to take 100 pips of risk, what is the reward? Can you at least make 100 pips on something like this? Is it within reason? Well, this low over here is 34.15. So if you're shorting this thing at 35.70, or what was that low that I said? 35.84. So basically, if you're selling this thing at 35.80, right, you need this thing to go to 34.80. Is that within reason? Well, lower high should lead to lower low. So although it's not, it would have been nicer if this move to here was 100 pips. That would have been nicer, right? What is this low over here? 34.15. I'm sorry. I'm reading the numbers wrong. Yeah, it is worthwhile because that's 200. That's over 100. That's like 150 pips if it can get here, right? So if you're risking 100 and you're going for 150 or 200, that's definitely worth the risk. So I like this. I like this as a short. Now, keep in mind there was some economic news coming out on the pound this week from the economic calendar. Just be aware of that, right? They didn't look like major reports, but you never know with this thing. Okay, so yeah, that's how I would treat the pound. Thanks for asking about that. That's a nice clear one. All right, dollar HUF. What is that? Let's see. HUF. This is Hungarian foreign. All right, I never get that one. So, well, dollar, we know dollar is strong. So look at this, and it's trying to break out, right? This is not the best place to be buying the dollar. I mean, if you were going to buy something, a dollar across, and you're getting long the dollar, you have a lot of resistance. Look at this. Look at all this resistance in this area. Not a good place, okay? This would be a place to be taking money off the table if you were long dollars. This would be a good place to lock in something in this area. You want to see a pullback. Now this structure stays intact. You should see a higher high slightly, but you want to look for the next pullback. And that next pullback could be like in this area here, somewhere above here, which is what, 306, 306.12. That's what you need to see, right? A higher low develop somewhere there, and that would give you better reward risk and see if you could participate in this trend. If this low here, which is 305.04, this low right here, if that low is taken out, if that's broken, that's not something that a bullish trend should do. Okay, so you might want to wait for it to fool around a bit and find its support before getting involved. But those would be the attractive levels. Somewhere above that low, or maybe perhaps a test of the low is fine. Now, a little minor break doesn't mean anything. But if it breaks and you see this price is like fooling around over here, it shouldn't do that. That means you're probably in a consolidation. Okay, something to just keep in mind. Anyway, thanks for asking. That's an unusual one. I don't get that one very often. Interesting to see. Let me jump over to the chat. Okay, Mario, BTC, is there any signals for continuation? No. Is there, or expected natural ways to pull back? Yeah, I'd be waiting. I'm still waiting for that pullback. Nothing to do here, as I talked about before. Hey, James, you need to look for what you, yes, James, and that's, you mentioned that again here, and let me just pull up Bitcoin, because people just grasp at what they can see, and you're going to see that everywhere. Even the experts, you know, that are, I've been in this game 2 years and I'm an expert. You know, all of you, if you've been watching markets for like 6 months, you too can be an expert, because everyone else is, right? All you have to do is have some marketing skills, and if you can just tell a good story, hey, you can push affiliate links. So here's the thing. It's what you cannot see. And you can't see if there's a huge sell order sitting up here. You can't see it. And you always get someone, well, I got the order book and I don't see anything there. The order book that you have like on Coinbase and all that stuff, that's a retail order book. You can't really see what's going on there. Okay? It's just the illusion. All these tools and all these things, these gimmicks that they try to sell to you to make you think that you have some sort of advantage or certainty, none of that is true. The reason why they put all that stuff in front of you is so that you trade, because that's how the exchange benefits, right? You trade, you generate expenses, right? There's a trade, there's a cost to your trade, or like with Forex brokers, they're taking the other side of your trade and they're very happy. So they'll put everything in front of you to get you to trade. It's like a slot machine. You ever see a slot machine with all the animations and colors and this and that and blah, 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 right? If it wasn't all animated and fun like that, people would probably not put as much money into a slot machine. All right, anyway, let me see what else we got here. So just go on reading the comments. Okay, James. The scammer. The scammer's in the house today. Hey, scammer, how are you? Yesterday there was 40 million sell on Bitstamp. Yeah, okay. Why not? Hey, why not? Why not? That huge bear pin bar was only 1 minute. Yeah, right. It's strange behavior. It's strange activity, right? Again, everyone's talking about this. And this is going to attract a lot of conspiracy theories. And who knows? Who knows what's going on in there? There's no regulation in this space in case you don't know, right? Bitcoin on Bitstamp is not regulated by any government organization. There's no SEC, there's no NFA, there's nothing. So they can do whatever they want, right? And that's one of the reasons why we don't short Bitcoin, right? That's one of the reasons. And, you know, because they can change the rules and when it's convenient for them. And we've seen that before over the years. So anyway, the scammer, thanks for mentioning. Stamp is usually quite illiquid. Okay, good to know from the scammer. Photo guy, Coinbase had an event today. An event? It had an IPO. Oh, okay. Interesting. Thanks for mentioning that, photo guy. How's everything? Haven't seen you in a while. Hope everything is well. Henry, if you can have a chance, look at, okay, hold on. James, and you look at, okay, hold on. Let me just check the time here real quick. Okay, yeah, I got a few more minutes. All right, let me just jump over. I'll get back to you. Thanks again for asking. Let me just jump over to the other chat. I want to see if I can get through just some more of these. All right, XTZ, got the pound, got the Hungarian one. Okay, Alice, please, it gets really, Alice, what is that? I've never even seen that one. Alice USDT, what is that? Okay, so saying it gets beat up, I don't really see anything special going on here. It's just pulling back, looks like a normal healthy pullback, looks similar to XTZ and all those other ones, coming off of, here, look, you got a resistance right here, coming off of that, no surprise. So here on something like this, again, relative weakness, right, against Bitcoin, which we've been seeing across the board. You're pulling back into an old support, an old resistance, which is likely to act as a new support. In fact, this structure here, if you looked at Bitcoin, right, that looks like the same situation as Bitcoin at 40K, right? And then you have this bullish move. And of course, now Bitcoin is continuing, and these things are giving it back. So that's where things get strange, because why isn't it following Bitcoin? Again, I don't know why. I don't care why. All that matters is relative weakness. So if Bitcoin pulls back, where is this thing going to go? There's no reason to buy this thing right now. What I'd wait for, if you're interested in this thing, if you're not in it and you're interested, your support, again, is in this area right in here, right? You have this, and you're at this one right now. You have this. So there's no buy signal. This is a place to look for one if you're interested in that swing trade. Otherwise, you're looking at, what is this here? $10, basically, round number, $10. That would be the next place to look. Right? You're not too far away from that. And that's it. Now, keep in mind, these coins, they typically follow Bitcoin until something along the way changes. Maybe some specific news comes out. Maybe someone's in a chat room somewhere and they start hyping it and it starts doing its own thing. So when an altcoin starts doing its own thing, that's where you need to be very flexible and understand the price action that you're seeing, because that's the only way you're going to be able to manage your risk in that situation. Because trying to find out why is really not going to help you. Okay, it's really going to be a matter about where is it now, how much risk am I looking at, where can it possibly go, and if I get in, is it showing me what I want to see, or is it showing me something that I don't want to see? And then you have to adjust from there. Because again, when the herd mentality gets out of control, these things go vertical, and you also have to be able to take profits along the way if you manage to, get it going and it starts to go your way when you're in it. Sometimes people get into these things that go vertical, and then they ask me, what do I do with this thing? I mean, you're in it from a good price? Yeah, and it's vertical. Should I sell it? Well, it's like, hey, sell some. Always sell some when it goes vertical. Capitalize on the herd. Hold on to some and wait for a sell signal. Okay, and see how much the market wants to go your way. So that's what I'd be looking for eventually on something like this, if these things can get their act together. Right now, there's a lot of concern. This lower high is not good. It's part of a very broad head and shoulders. Like I said before, I don't put a lot of weight into those broad patterns, but certainly not welcome for longs. Okay, so just something to keep an eye on. Anyway, thanks for mentioning, Alice. Okay, from Frankfurt. Okay, nice, welcome, Tulpin. All right, the ETH high today was short stops liquidation. Quite a few were taken out. Okay, good to know. All right, good to know. All right, let me jump over to the chat. Let me see what else we got here. All right, so let me see. Look for Bitcoin pullback, and look for a Bitcoin pullback while you're. It's not really pulling back, is it? No, it's not a pullback. It pulled back like 100 points. It's nothing. Anyway, all right, just skipping through here. Skipping through. I know I won't be able. I'm sorry if I don't answer your question. Look at Bitcoin. Okay, Elizabeth. Okay, should we ignore the fear and greed index? All right, so the fear and greed index. I don't know what makes up the index. I'm sure I can Google it and find out how it's composed, but yeah, any extra layer of complexity, in my opinion, doesn't really provide any advantage. And as a market timer, excuse me, as a market timer, especially short term, you need to have as much simplicity as possible. That's one of the few advantages that we have. It's an advantage because it doesn't hold you back from information that tells you what's going on right now at the moment. Candlesticks offer very valuable information. You just have to know how to put it into context because they're also random, right? So how do we put that into context? Levels and structure. So that's why I stick to that, because it's the most relevant and most accurate information I can make judgments on. That's why I don't pay attention to anything else. Okay, like things like the fear and greed index, and people always ask about the Bitcoin longs versus shorts, or the Bitcoin dominance, or all these other things that I suspect gurus are pushing out as gimmicks because they sound good and they make the guru look smart. But theoretically, none of these things, if they offered an advantage, they wouldn't be available. Okay, for one, they wouldn't be like publicly available. So thanks for asking. All right, thank you. Okay, no problem, no problem. All right. Okay, cool. Thanks, I appreciate that. All right, let me jump over here. Link? What is that? Link? Link. Link. Is that a coin? Oh, Link, of course. Chainlink. Man, it's been a while since someone asked me about it. I didn't even recognize the symbol. Yeah, so, okay. Lower high. Looks just like the other one we were just looking at. Okay? Lower high. Potential double or whatever, head and shoulders, which, like I said, I don't put a lot of weight into that. But what I do put weight into is the relative weakness, meaning Bitcoin at highs, these things are not at highs. Why isn't this thing pushing? That's not good. Okay? Meaning, if Bitcoin pulls back, where is this going to go? So yes, you have an attractive level here. This is an old support, which is what, $25, okay? And if Bitcoin pulls back though, the question is, are these things going to get hammered? Because a lot of them are in position, they're in position to get hammered. What is the low here? They're $22, right? So you're looking at something like that. If Bitcoin pulls back and that relative weakness follows through, all these coins are basically saying that they're weak. And if the leader pulls back, that's what you have to watch out for. So I wouldn't be buying these right now. There's no buy signal in this thing anyway. I would just be watching the levels, okay? Watch the supports, and if price can get to a support, look for Bitcoin to give you some sort of signal. Now, this relationship right now is acting a little strange, and it shouldn't be doing that. So one thing with market relationships is they work until they don't work, right? They're in line, they're consistent until then they get like irrational and they get strange and they become confusing. You just have to accept that. It's part of the random nature, right? And when they realign, okay, cool, you use them again. So in this situation like this, I'm saying, if this thing pulls back to a support, it sits there, and then Bitcoin pulls back, and this thing holds, and then Bitcoin gives you a reversal, and then this thing gives you a reversal. Okay, you want to give it a try? You should have enough stuff in place at that point to take a reasonable risk. Otherwise, if you don't want to use Bitcoin as your guide, then at least give this thing a chance to produce something attractive. I can't even measure risk. I can't do anything with this. So what you want to see is like, look at this formation back here, which followed Bitcoin. Okay, look at this. Higher low, inside bar, you could measure risk, and Bitcoin was doing the same thing, right? That's ideal. That's what you want to see when you're taking all these. Now, what if we rewind and we were at this time? What would we say about something like this? Well, would we say, well, everything is showing a higher low, everything is showing an inside bar, buy everything? No, we don't say that. We'll say you pick one or two or three that you like or whatever, because it's all the same trade typically, okay? Buying a lot of these, when they're following Bitcoin, it's just buying a mini version of Bitcoin. That's what we look at it in terms of risk. So you pick the one that you like, or two, or whatever, but throwing money at all of them is just one big Bitcoin trade, and you don't want to get caught in something like that, because if things don't go the right way, it becomes very stressful. And when you're stressed out, you're much more likely to make an ineffective decision, meaning you bang it all out at the bottom, you get scared out of stuff, or you hold stuff too long, you get margined out. It just turns into a mess, right? And it's unnecessary. You need to keep things simple so that you could make decisions quickly and with confidence. Without confidence, you can't do anything in this game. And you have to build confidence. It's not, you can't fake it. Now, these guys, you just be confident, right? Yeah. Confidence comes from knowing you have some sort of control. Now, we have no control in the markets. So what are we controlling? We're controlling ourselves, right? We're controlling risk. That's the only thing we can control. So when you control that effectively, managing your own behavior and your risk, that's where confidence comes from in this game. Not making money. People think, this guy makes billions of dollars. He's so confident. And any of these guys that are bragging about all these numbers, most of them are fake, first of all. But that's not where confidence comes from, is my point. It comes from being able to control your risk and knowing that when you get into something, that your risk is going to be limited and that your loss is going to be under control. And then that's what makes you confident to take that risk, okay? So anyway, thanks for asking. All right, let me just check the time here. I got to wrap this up. I'm just trying to see if I can answer a couple more questions that aren't charts. Let me see. Bitstamp Whale got okay. Hey, long time follower. Hey, back. Good to see you. Oh, Phoenix. Okay. Can you talk about your approach selling, locking in? Okay, that's a good question. I can answer that. Can you please have at Hive Blockchain Tech? Okay, so look, I see lots of questions here. Oh man. Look, I appreciate everyone's questions. I'm just going to answer this one and I'm going to have to wrap this up. But here's the thing. So as far as taking profits, you just mentioned here, can you talk about locking in profits during, so during a bull run, all right, and let me go back to something that's showing, we'll go back to Bitcoin because Bitcoin looks strong, right? Something like this, as far as taking profits go, it's a function of what your risk is. So for example, if you bought into this thing, right, of course after the fact, if you bought into this thing around 40K and your risk was about 4,000 points, which at the time, that's your typical swing trade risk for Bitcoin is about 4,000 points, and you're up 4,000 points. That's 1-to-1, right? And that's one place to begin taking profit off the table. Now, as your reward risk improves, so if you're at 1.5-to-1 or you're 2-to-1 because the market just keeps working your way, that's where you start locking in some more. Now, what if it's at 3-to-1? Okay, and you're like, great, should I take more off the table? Well, at 3-to-1, you've locked in 2/3 of your position, why not just let it ride and put a trailing stop, okay? And then just let the market stop you out wherever it wants to. Now, in a case like this, you say, okay, well, where would I put the trailing stop? In a situation like this, this is where I'll look at like something like an 8-hour chart because it has more detail. I mean, I could still get the same information from a daily chart, but an 8-hour sometimes can just give you some more appropriate levels, right? So in this case, let's just say, let's say the market looked like this, okay? And forget that crazy pin bar. And in fact, this is Bitstamp. So let's go to a Coinbase one because that one doesn't have that strange candle. All right, so let's say you're on Coinbase and you're like, all right, I'm long from those great prices. Your stop, if you're going to trail your stop, you'd have to put it somewhere like there, okay? And if the market goes there, you get stopped out and that's it. You're not going to get the top. So forget that idea of getting the top. The only way you get the top is randomly. You put a limit order there, it happens to tap you out at the top and turns, and you're like, yeah, that was cool, I got the top. But then this happens, right? Oh, I missed out. No, it's just random. So in this case, if you were on Bitstamp, you would have gotten knocked out here, right? But if you were on Coinbase, you're still in the trade, and there's no reason to get out of this thing. If you've locked in 2/3, now what do? With the higher low established, you move your stop to here, okay? And either this thing will stop you out tomorrow or something if this thing pulls back, you know, or it just gives you another little tight higher low and keeps going. That's, you're letting the market pay you. Now keep in mind, at some point with your trailing stop, you're going to get tapped out and you're not going to get the top. So what you have to be happy with is if you get stopped out there, you say, well, what was my reward risk there? Was it 3-to-1? Was it greater than 3-to-1? That's a home run. Even if the market was at 4-to-1 at one point, and then you pulled back and tapped you out at 3-to-1, that 4-to-1, hey, that wasn't your money, right? That's the way you have to look at this. I know it's hard to understand because people let greed is a problem. And people, I want more. I took the risk, I want more. I want to get as much as I can out of this market. Sure, we all do, but the market is random, okay? It's highly random. So you can't sit there and try to get more. There's nothing you can do to really squeeze out more, okay? So what you can do is you can open up the possibility of the market paying you more, but as you open up to that possibility, you're also opening up to the risk that comes along with it. And in this case, the risk is it pulls back and taps you out at a lower price. You're willing to give that money back, okay, to make more. That's always the trade-off. And occasionally, you know, you get a move that doesn't really pull back and you get a nice big move. But these type of moves, you have to keep in mind, these type of moves that you're looking at here are rare. They're uncommon. So if you say, well, I'll get the next one. Well, the next one may look like this, okay, and tap you out, all right? Or the next one may look something like this, like, okay, yeah, I got this thing, and then it taps you out. And, you know, you give back a bunch because you're trying to play that game because you're looking for this move. But playing that game of always looking for this big move is not an effective game. You want average moves, right, because they're more frequent. So that's why it's just, you have to look at your habit, not the chart. Your habit is going to determine how you manage that situation with reward risk and taking profits, not the chart. I have to emphasize that because everyone looks to the chart and they say, oh, I'll put a moving average on my chart. I'll put an oscillator on there and the oscillator will help me get out at the top. No, it's not. It's random. So if you have good effective behavior, meaning you take it, you lock in some profit at 1-to-1 or maybe 1.5-to-1. You lock in some more at 2-to-1. And now you're going to let the market run. You move your stop to break even. You just went from your 4,000 point risk to a trade that carries 0 risk. If you've locked in 2/3 and the thing is 3-to-1 in your favor and you say, I'm not putting any trailing stop. I'm just going to put it at break even. And the market goes all the way back to break even and taps you out, which can happen. The trade is still green. It wasn't max green, but it's still green. And that's all that matters, okay? That's the mindset you must have if you're going to play the short-term timing game. All right, so I hope that gives you some perspective and some insight. I mean, I could talk for hours on that subject. And, you know, I talk too much. Anyway, all right, so I got to wrap this up now. again, I want to thank everyone for taking the time here, spending some time with me, asking all these great questions. I apologize if I missed a question. Just please come back to my next one and ask me again. Yeah, so let me just see something here. Okay, cool. All right, so again, thank you. And again, Bart Guy, thank you for the coins, all that stuff. I'm usually on a couple, twice a week. The thing with TradingView, like I said before, is I'm trying to iron out this technical situation. It's a pain. I'm trying to, iron that out, but hopefully I get that ironed out soon. And I will be on TradingView more often than I am. And anyway, but I want to thank all the TradingView people for spending some time with me here today. I hope you found it useful. And same with the people here on YouTube. Thank you so much for spending some time with me here today. Okay, so enjoy the rest of the day, the rest of the evening, wherever you are in the world. And thank you so much for watching.